Good evening, everyone. Welcome to the second class of our JAIIB PPB subject. So first of all, let me know is audio, video both are okay? Are we good to go? So first, let me know is audio and video both are okay? Good evening to all of you. How are you all? So are we good to go? Is audio, video both are okay? Let me know. Yes or no? Both are okay now. So in the first class which we have discussed, that was the orientation class in which we have discussed what is the JAIIB exam, what are the subjects and everything we have discussed. And also not audible. Ashok sir is saying I am not audible. Am I audible or not? Let me know. Am I audible or not? If no one is facing any kind of issue, just type all okay. Just type all okay if you are not facing any issue, so that I will be knowing that there is an issue from my end or there is an issue of individual candidate. All okay. So if anyone facing any audio issue, any audio issue, then do rejoin the session. Okay, rejoin the session if you are facing any kind of issue. So in the last class, in the orientation class, we have discussed the syllabus. So now you know that the syllabus has been given by the IIBF and the syllabus is very vast. We all know that. So what we have to do, what we have to focus here is, first of all, we have to cover the conceptual classes. So what we are going to do in foundation batches, in the foundation class, we are about to cover the basic understanding of the subject. We are going to have a understanding of the subject. What is this? What does it mean? Understanding of subject means, let's say for example, when we will start the subject or we will start the syllabus topic wise, which has been given by the IIBF. So we are going to study the PSL. Okay, under the PSL you will find certain terms like what is A and BC. You will find the CEOBE. Okay. Under the PSL, you will find different types of banks name, like rural banks, like a small finance bank. You will find the name of the cooperative banks, urban cooperative bank, etc. So that's what we are going to cover in the particular foundation classes. In foundation classes, we are going to cover all the terms which are related to your syllabus of principles and practices of banking, so that we will be covering everything which is going to be helpful in the further when we are going to have the subject wise or topic wise classes. Okay. Nisha, am I audible to you now? If not, then rejoin. So if anyone facing any audio issue or video issue, then you have to rejoin the session, because everything is okay from my side. Now I will be starting the session. Okay. So let's start. Before starting the session, first of all, I am taking the sessions on YouTube also for the PPB English medium at the 7 AM and for the Indian economy, Indian financial system at 8 AM. These are the two YT sessions. These are the two YouTube classes that you can join, because here we will practice the number of questions which is required to be there. Now, the principles and practices of banking, what we are going to cover today is financial institution. First, let me know what is financial institution. According to you, what is financial institution? It is an English medium class, Sanjay sir. The bilingual class of PPB will start at the same time 9 PM, but the batch will be different. Okay, this is the English medium batch. So, bilingual class time is also 9 PM for the PPB, but that's a different batch. You are in the wrong batch if you have enrolled in the bilingual batch. Now, let me know what is financial institution. If you don't know what is financial institution, just write don't know. If you don't know any particular question, just immediately write don't know, so that we will continue by understanding the topic. We don't have to waste time. Okay. So, what is financial institution? So, if I talk about the financial institutions are helpful in the financial system. Where they are helpful? They are helpful in the financial system. So, when I talk about the financial system, what is financial system? Financial system is simply a type of system in which we are trying to exchange the funds among the persons who have surplus money and the persons who have deficit of money. So when we exchange the fund among the persons who have deficit of money and the persons who have surplus money, that is known as your financial system. This is the financial system. Exchange of funds will be done between them. Okay, what you are doing? You are exchanging the funds. Now to exchange these funds among the people who have surplus money and who have deficit of money, we need certain platform. We need certain institution, we need certain organization or banks or financial institution or NBFCs which are helping us to transfer the money. Let's say for example, there is person Soni. Soni ma'am is there. Okay, and I am there. We two are there. So Soni ma'am have surplus money and I have deficit of money. Now we don't know each other. How I will be capable of knowing that there is a person whose name is Soni and that person having a surplus money and he or she can give me the money. So for that purpose we need a mediators, and those mediators will be your financial institutions. Those mediators are your financial institutions. So financial institutions are simply the type of institutions which are helping us out to do what? To exchange the funds among the persons who have surplus money and the persons who have deficit of money. Clear? Video is not visible. No, this is not a bilingual class. This is an English medium class. Audio not visible. How can be audio visible? How you can say audio is not visible? Institution where money is involved, yes, you can say. And where deposit is taken, loan is given. Okay, very good. So whenever we talk about the financial institution, these are the institutions which are helping us out. Okay, these are the institutions which are helping us out to exchange the money among the people who have surplus money and the persons who have deficit of money. Clear? Bilingual class will be available in the application. Okay. Now, so what is financial institution? You can see here that the financial institutions are the entities. These are the entities that help individuals and businesses fulfill their monetary or financial requirement. Like why we have so much financial market, why we have money market, why we have capital market, why we have forex market, why we have debt or bonds market, because everybody have a certain need of funds. Everybody requires money for the different persons. For example, I required money to maintain the standard of living. Certain other person is requiring money to start a business. The another person require money to save her himself or herself from the any kind of issues or health issues or whatever it is. So everybody needs funds. So individual or businesses require certain monetary or financial requirements are there, and for that the financial institutions are working. So financial institutions are entities that help the individual and businesses to fulfill that monetary and financial requirement either by depositing money, investing it, or managing it. So you can deposit money, you can invest the money, or you can manage the money of the people. Okay, some of the institutions labeled under this category include the banks, investment firms, trust, brokerage, ventures, insurance companies, etc. Okay, so what we are saying here, that simply the financial institutions are the institutions which are labeled under the category which includes your bank, investment firms, trust, brokerages, ventures, insurance companies, etc. So all these are the mediator, all these are the financial institutions which are helping us to exchange the fund. Okay, now these financial institutions has been divided into two categories. These financial institution has been divided into two categories. The first category is banking institution, and the second category we have your non-banking financial institution. Now there are certain institutions which are banking institution which works under the Reserve Bank of India. All the banking institutions working under the Reserve Bank of India, and they are helping us to exchange the fund. Gautam sir, this is the Principles and Practices of Banking Foundation Class 1 English Medium batch. Okay. So RBI is the regulatory body of the banking sector. So RBI is there under the financial institution. First type of financial institution we have banking institution, and the second we have a non-banking financial institution. These non-banking financial institution will be started by regulating or by starting under the Companies Act or under certain act, Societies Act and all, but they have to follow the rules of RBI. If any non-financial institution wants to work in country, they have to follow the RBI. So they follow RBI rules and regulations, but their establishment will be done under the certain acts. Establishment will be done under a certain acts, but the rules will be followed by them of Reserve Bank of India. This is the difference. Like the commercial bank is there, cooperative bank is there. They are following the rules of RBI and they are getting license under the Banking Regulation Act 1949. But when I talk about the non-banking financial companies, they get the license under the Companies Act 2013, but they have to follow the rules and regulations of Reserve Bank of India. Okay, let me know, is it clear? Let me know, is it clear to all that the financial institutions are divided into two categories, that is your banking institution and non-banking financial institutions. Nisha, why you are raising hand? Anand sir, why you are raising hand? Is there any doubt, Nisha ma'am, to you and Anand sir to you? If you have any doubt, you can ask in the chat section. Okay, let's continue. So today we are going to discuss about the banking institutions only. We are going to discuss like what is banking institution, how many banking institutions are there and how they are working. Okay. If you are not having the video or audio, if you are not having audio and video, then you can rejoin the session. Try to rejoin the session, you will find the video there. Once rejoin the session. Okay. Now let's continue. So first of all, we are going to discuss about the banking institutions today. So the first banking institution is the central bank of our country. The first banking institution will be central bank, and the central bank of our country is RBI, that is the Reserve Bank of India. So RBI is the central monetary authority of our country, that is the Reserve Bank of India. Okay. Now the RBI has divided the banking system into two categories, that we have first one scheduled banks, and the second we have non-scheduled banks. The first one is scheduled bank and the second one we have a non-scheduled bank. So RBI has divided the banks of our country into two categories, scheduled bank and non-scheduled banks. Okay, that is scheduled banks and the non-scheduled banks. Clear? Now these scheduled banks are divided into further three categories. What are these three categories? First we have commercial bank. First we have commercial bank. Then the second we have non-commercial bank. Non-commercial banks. Then we have cooperative bank. I will be explaining each and every type of bank. Don't worry about it. First, I will be making the chart that what bank comes under which particular category. Then I will be explaining each and every type of bank. Okay. Now, so scheduled bank we have to cover. After scheduled bank, we have commercial bank, non-commercial bank and cooperative bank. Under the commercial bank, we have again three category of banks. That is, first one is public sector. First one is public sector bank. Second one we have private sector bank. Private sector bank. And the third one we have a foreign bank. So why we are completing these types of bank? Because when we are studying the PSL, let's say for example, when we are studying PSL, the target will be given as per the name of the banks. Like rural bank have to give this much amount of loan. The payment banks do not give loan under the PSL. The small finance bank has to give this amount of loan under the PSL. So that's why we will be able to understand the chapter when we know the basic terminologies related to the syllabus. Okay. So the public sector bank, private sector bank, foreign banks are there. Now the public sector banks are divided into two categories. That is your State Bank of India, SBI, and the nationalized bank. I hope it is visible to you. Let me know this SBI and nationalized bank is visible or not. Is it okay? I have written that is here. What is PSL? PSL is priority sector lending. PSL is priority sector lending. I will explain PSL also. Just wait for a minute. So this is the commercial banks type. Now, if I talk about cooperative banks are further divided into three categories. The first one is primary credit society. The second one is district central cooperative bank. The third one is a state cooperative bank. I will be writing down the full form of all these three when I will be explaining them in the detail. Okay. So the cooperative bank have three types: primary credit society, district central cooperative bank, and a state cooperative bank. Now the non-scheduled commercial banks, or not scheduled bank, not the commercial, non-scheduled banks are local area banks. These are the local area banks. So these are the types of bank which we have to study under the central bank of our country, under the banking institutions, under financial institutions of our country. Okay, this is what we have to cover here. Clear? I will be explaining non-commercial bank. Don't worry. These are the non-commercial bank. Okay. One by one, we will understand all the types of banks. Urban Cooperative Bank will come here. I will explain. Now, apart from that, we have three different types of banks also. And those three different types of banks, first we have the RRB. They are also comes under the commercial bank category. We have regional rural banks. We have payment banks. We have a small finance banks. So these are also the types of bank which are there. RRBs, regional rural bank. Then we have payment banks. Then we have small finance bank. All these three types of banks we have, that is the part of your commercial bank. But we are writing it in a separate way because they are started or they are introduced or established because of the certain specific purpose. Because of the certain specific reason we have introduced this. Okay? So these are the types of bank which are working right now in the country. Now let's understand these banks one by one. First of all, we are going to cover what is scheduled bank and what is non-scheduled bank. So if I talk about scheduled bank, so the scheduled banks are those banks which are specified under the second schedule of RBI Act 1934. So those banks which has been listed under the RBI Act 1934 second schedule, these banks are known as scheduled bank. Okay, these banks are known as scheduled bank. But there are two conditions. The first condition is that the bank should have a minimum paid up capital. The bank should have a minimum paid up capital of rupees 5 lakh. First condition. And the second condition is that that bank has to maintain the reserve ratios. Bank has to maintain the reserve ratios. And what are the reserve ratios? We have two reserve ratios, that is CRR and the SLR. I hope it is clear. So what is scheduled bank? Scheduled banks are the types of bank which are listed under the second schedule of RBI Act 1934. Second schedule of RBI Act 1934. So these banks will be known as scheduled bank, and the criteria to come under the second schedule will be bank should have a minimum paid up capital of 5 lakh, and the second condition, they should maintain the reserve ratios. Okay. Now, what is paid up capital? Now, let's understand what is paid up capital. I hope you all know that. If you don't know, if you don't know any particular term which I am explaining in these classes of foundation batch, do make sure you are asking each and every question, because these are the foundations which are going to help us to understand the whole subject of the PPB. Okay. Now, there are three types of capital. First, we have authorized capital. Then we have issued capital, and then we have paid up capital. If you know the answer, do let me know what are these type of capitals are. Authorized capital, issued capital, and the paid up capital. What are these type of capital? Let me know if you know. And if you don't know, just write don't know. Okay. Now, the paid up capital is also known as subscribed capital. It is also known as subscribed capital. Okay, don't know. So let's understand what are these. So first of all, if I talk about the authorized capital is the total capital. It is the total capital which is required for a company is known as your authorized capital. The total capital required by a company. The total capital required by company in lifetime. That will be known as your authorized capital. Okay. Now, what is issued capital? Issued capital is a part of authorized capital. It is a part of authorized capital which is required in present. Okay. Now, what is paid up capital or the subscribed capital? It is a part of issued capital which is subscribed by public. which is subscribed by public. Okay, now this is what we are understanding. Authorized capital is a type of capital which is required by a company in a lifetime period. Second, if I talk about issued capital, which is required in the present duration, in the present, right now, like today, whatever capital is required by the company is issued capital. And paid up capital is a type of capital which is company got back from the public, or which the capital which subscribed by the public, that is known as paid up capital. Authorized capital means maximum capital we can raise from the market. Very good, Manohar sir. Capital which is authorized by the company is authorized capital. Okay, Pritam sir. Customers deposit is paid up. I will be letting you know, Ashok sir. Now let's take an example and you will be answering your question only. So first of all, let's say I want to start a business. Okay, I want to start a business, and for that particular business, I need 50 crore rupees. I need a 50 crore rupees. That's the requirement of the business. What are the requirement of the capital? I need a 50 crore capital. Okay. Now the second, out of this is the total capital. Right now I want to start a branch in Gurugram. Let's say I want to start a branch in Gurugram, and for that purpose I require the 10 crore rupees right now, because I am starting the branch in Gurgaon in the January month. So I require the 10 crore capital. Now, so what I have done, I have issued the shares. I have issued the shares of 10 crore. Out of this 10 crore, people have subscribed the capital of 5 crores. So these are the three types of capital in front of you. Now let me know which one is authorized, which one is issued, and which one is your subscribed. Let me know. According to the amount of the capitals, do let me know which one is authorized. Okay, everyone is saying. What about rest? Which one is authorized, which one is your issued, and which one is subscribed? Okay, everyone is saying authorized capital is 50 crores. Very good. Because this is the capital which is required for your business overall. Okay, and the 10 crore will be your issued capital, because I needed the 10 crore right now. I have so many options. I can take loan from the bank, but if I take loan from the bank, there will be an obligation that I have to return that loan to the bank, because I have an obligation, I have borrowing the money. But when I am issuing the shares, I am not borrowing the money, I am making the other people partner in my company. So I am giving them the ownership, whatever shares they are purchasing in the company. So when you issue shares, you don't have obligation that you have to return the money. No. If you are earning the profit, they will get the profit. The shareholders will get the profit. If you are bearing the loss, the shareholders have to bear the loss, because they are the owner, they are the partner of your company. That's the benefit of the shares. So I am issuing a share of 10 crore, that will be a issued capital. Okay. Now, so is it not possible that if I am issuing a share of 10 crore or 50 crore or 100 crore, so everybody will purchase the shares of my company? It depends how much value, credit worthiness my company has in the market. How much, what is the future of my company in the market? What is the current situation of my business in the market? Okay. How much trust people have in my in my business? How much trust people have in the particular sector I am starting my business in? So according to all these things, people will decide that they want to invest in the company or not. Okay. And that will be known as your issued capital, paid up capital. According to all the analysis of the company's future, the people decide that they want to invest in the company or not, and that defines the paid up capital, that defines the subscribed capital. I hope it is clear to all of you. Let me know, is it clear? Yes or no, is it clear or not? All the three capitals are clear to all of you? The people who are watching us on the YouTube, if you have any doubt, you can ask also. I'm checking your comments also. So if you have any doubt, you can let me know. And if everything is clear, do write in the chat section that everything is clear. Last part is your paid up capital. Let's say I have issued the share of 10 crore, right? Now, it is not mandatory that I am issuing a share of 10 crore, so all the shares will be purchased by the public. No, na. So I have issued the share of 10 crore, but only 5 crore share of my company has been purchased by the people. So I got how much capital? I required the 10 crore capital, but how much capital I got from the market? I got the 5 crore. That's why it is known as subscribed capital. That's why it's known as subscribed capital. That's a part of your company's capital which has been subscribed by the public. It means public has paid you this. Public have taken a piece of paper from you, that is the share, and public has given you the 5 crore amount. Out of the 10 crore, you issued the share. That's why it's a subscribed capital, the capital which has been subscribed by the public. Clear? Let me know. Okay, clear. Now let's move forward. So we were discussing about the schedule banks. So what are schedule banks? Schedule banks are those banks which are listed under the second schedule of RBI Act 1934. Minimum capital required, paid up required 5 lakh. They have to maintain the reserve ratio. Now reserve ratios is known as CRR and SLR. Acha, do you know what is CRR and SLR? Do you know what is CRR and SLR? Do let me know what is CRR and what is SLR. What is CRR and what is SLR? So the full forms are cash reserve ratio and statutory liquidity ratio. I don't want full form. Just give me the definition. Just let me know what actually the CRR. I don't want the full form. I know the full form. Okay, cash reserve ratio, statutory liquidity ratio. Do let me know what is it. Explain the term. Okay, minimum cash to be reserved with RBI by banks. Okay. Statutory liquidity ratio and cash reserve ratio. Okay, that's the full form. Bank has to maintain certain amount of NDTL in forms of cash. It is called, very good, Meera ma'am. What about rest? Bank reserves in form of cash, gold in RBI. SLR in gold security. Okay, very good. Everyone is answering the question. So first of all, if I talk about the CRR, what is CRR? All the scheduled commercial banks have to maintain a certain reserve with RBI, the central bank of our country, in form of cash as a percentage of NDTL that will be prescribed by RBI. That will be prescribed by the RBI. So what is CRR? CRR is cash reserve ratio, that the scheduled commercial banks have to maintain a certain reserve with RBI in form of cash as a percentage of NDTL. That will be known as your CRR. Okay, and right now the CRR, how much CRR is going on? Right now 4.5% CRR is there. Okay, I am not giving the detail that in which particular act it is coming, what is the minimum, maximum limit. I am not giving that all detail right now. It is just the understanding of the topic so that you will know what is scheduled banks. Okay, so CRR is simply a reserve which all the scheduled commercial bank have to maintain with the RBI in form of cash as a percentage of NDTL. Now, what is SLR? SLR stands for statutory liquidity ratio. Here, all the scheduled commercial banks have to maintain reserve. They also have to maintain reserve in form of cash, in form of gold, and in form of securities. Okay, and that will be as a percentage of NDTL they have to maintain. As a percentage of NDTL they have to maintain. Now, they have to maintain all these reserves with whom? With themselves. They have to maintain with themselves. So this is known as SLR, statutory liquidity ratio, and right now it is 18%. Right now it is 18%. So under the CRR, all the banks have to reserve the money with RBI in form of cash, okay, as a percentage of NDTL that will be prescribed by RBI only. In SLR, statutory liquidity ratio, all the scheduled commercial banks have to maintain the reserve in form of cash, gold and security with themselves only in a percentage of NDTL, that is your SLR. Right now CRR is 4.5%, SLR is 18%. Let me know, is it clear? Let me know till now everything is clear. Okay, clear. NDTL is what? So NDTL is net demand and time liability. What is NDTL? NDTL is net demand and time liability. Now, what is net demand and time liability? Let's understand that also. So full form you all know, that is NDTL, net demand and time liability. First of all, to understand the NDTL, we have to understand the different things. Other terminology we have to understand. Let's say there is a bank. Okay. Bank has certain, every business have certain assets and every business have certain liabilities. Okay, every business have certain asset and every business have certain liability. So does bank have certain asset and certain liability. Okay. Now, The asset of a bank is simply the advances bank is giving to the customer or the loan bank is giving to the customer. So loans and advances is known as asset of a bank. Okay. Now what is liability? Liability simply means the deposits of public. The deposits of public is known as liability. That is what bank have to return whenever the customer is asking for. So liability is simply the deposit of the public and the asset means the loan and advances bank is giving. Okay. Now how many types of deposits are there? Let me know. How many types of deposits are there? A certain amount in cash, gold or security in SLR. Very good, Meera ma'am. Okay. So there are two types. Okay. So the types are two types. What are the name of these types? First we have demand deposit. And second we have term, or you can call it a time deposit. Or we can call it a demand liability or term or time liability. Both things are same. So under the demand liability, we have CASA. CASA means current account and savings account. So these are the accounts which are actually going on as per our demand. Whenever I want, I can deposit my money. Whenever I want, I can withdraw the money. That is known as your demand deposit. Now, what is term or time deposit? Term or time deposit may cover the RAFA. Recurring account and fixed account. That is, in general language, we are known as RD and FD. So these are the deposit which will be fixed for a certain period of time. From 7 days to 10 years your FD, from 6 months to 10 years your RD. So they have a particular time period maturity that after that you will be getting that money back. So this is what we are talking about bank assets and liabilities. Okay, this is what we are talking about the bank's assets and liability. Clear? Now next. So when we talk about the NDTL, we can see here, to know the NDTL, the full form of NDTL is net demand and time liability. Net demand and time liability. So we know the liability of a bank is of two types. The liability of a bank is of two types, demand liability and the term liability. So demand liability will be covering the CASA and the time liability will be covering the RAFA. Achha, if I can say that the balance of CASA and RAFA is NDTL, will it be correct? If I say the demand and time liability, it means the CASA and RAFA balance is NDTL. Will it be correct definition or it will be correct explanation? Term deposit, demand deposit. Very good, Sampath sir. Sorry, it's a Sampath Kumari, ma'am. No, it will not be a right definition. Reason, because they are talking about the net value. Net means remained. They are talking about the net value. Net means remained value we are talking about right here. Okay, so if I talk about the NDTL, how to calculate NDTL? NDTL is equals to demand liability plus time liability plus other demand time liability minus asset with banking system. Asset with banking system. Now, this is the formula of your NDTL. So, first of all, in the demand liability, what we have here? In the demand liability, we have CASA. In the demand liability, we have CASA. In the time liability, we have RAFA. In the other demand and time liability, what does other demand and time liability means? It means the liabilities which are not covered under the demand and time liability. What are these liability? Like the interest payment. Bank have to pay interest on the deposit account. Na? Bank has to pay the dividend to the shareholders also. So these are the liabilities of the bank which are not covered under the demand and time. Okay. That's why we have to enter here the other demand and time liability. I hope it is clear. Let me know till now everything is clear. Is everything is clear till now? Let me know. Okay, clear to all. Now, next, asset with banking system means the money of a bank which is deposited with other bank. The money of a bank which is deposited with other bank. Money deposit in current account of other bank or financial institution. So one bank's money is deposited under the other bank's current account or the financial institution's account. That will be known as your NDTL. That will be known as what? Your NDTL. I hope it is clear. Yes or no? Okay, clear. So this is what NDTL is. Okay. So the percentage of NDTL have to be maintained under the CRR SLR by the banks, and that will be prescribed by the Reserve Bank of India. Asset means what? Asset means your bank's money that has been with the other bank. Okay, that is known as your asset. Clear? And this is how we can calculate the NDTL. So we have discussed. Now I think you can easily understand what is schedule banks. I hope you can easily understand what is schedule bank, because all the terms related to schedule bank we have covered. Okay, so schedule banks are banks who are defined under the second schedule of RBI 1934. They have to maintain a minimum paid up capital of 5 lakh and they have to maintain the reserve ratio also. Now let's go to the non-schedule bank. Now let's understand what are non-schedule bank. So non-schedule banks are the banks which are not listed in the second schedule of RBI Act 1934. Okay, and there are only three banks are there. Those banks are known as local area banks. Only there are three banks who do not have the minimum paid up capital of 5 lakh and they do not maintain the reserve ratios, and there are only three local area banks in our country right now. Clear? Sumit sir, what you are asking, why bank do this, why bank do what? So I hope the schedule bank and non-schedule bank is clear to everyone. Now let's move to the next type of bank, that is commercial bank, non-commercial bank and cooperative bank. If I talk about the commercial banks are those banks which mainly work for the profit. Commercial banks are those banks which mainly their motto is to earn profit, and they provide all types of banking services. They provide all types of banking services. All types of banking services. Like for example, you can deposit your money here. You can take loan from here. You can have a locker facility. Okay. You can have here demand deposit, demand draft facility. You can have here check facility. Okay. You can have here merchant bank facility. Merchant banking, etc. So the type of bank which is providing all kinds of activities or all kinds of banking services, that is known as your commercial bank. And their main motto to work is your profit. So they charge for your services, whatever services they are providing to the customer, they are charging. Okay, they are charging a certain fee or certain interest on the services, or certain commission on the services they are providing to the customer. We are going to discuss that also, na? Non-scheduled commercial banks, non-scheduled banks name we are going to discuss. We are going step by step, na? Don't come into rush into anything. Okay, I will be clearing each and every doubt of yours. In the end of the session, if you find out like this is not I have understood, then you can ask me. So I will be telling you the names, the examples, the understanding of the type of bank or everything. Okay, don't rush into tell us everything right now. Okay, everything have a certain time which we are going to discuss that. Achha, speed is very fast kya? Let me know. Is the speed is very fast? Yes or no? Should I maintain the speed, this is speed, or should I slow the speed? Okay. Okay, now Jyoti ma'am, till now whatever I have discussed is clear to everyone? Okay. So first of all, don't make notes in the class. Do try to understand the concept. If you are making the notes in the class, now this is not the right time to make notes. This is the time in which you have to understand the topics. Your full concentration should be on the topic only. Don't focus on maintaining the notes and all. Okay. For the notes, you can watch the recorded video and then you can make the notes. Okay. I will be going little bit slowly now. No issue. So I hope the types of the commercial bank is clear to all of you. I hope the commercial bank is clear to all of you. Okay. Now let's understand what are the different types of commercial banks. So commercial bank have three types. The first type of commercial bank is public sector bank. We have public sector bank. So public sector banks are those banks in which the 51% shares or more than 51% shares, the 51% shares or more than 51% shares is with the government of India, or not, I can say government of India, with the government of the country. Whatever country you are talking about, when the government have 51% shares or more than 51% shares, that particular bank will be known as public sector bank. Okay, that bank will be known as public sector bank. Clear? Let me know. So public sector banks are those banks in which government had the 51% shares or more than 51% shares. Okay, clear. Now, then we have private sector bank. Then we have private sector bank. Then we have private sector bank. Now, the private sector bank in which the private ownership is there. When the 51% shares and more than 51% shares is with the private ownership. It means a certain individual person have 51% shares or more than 51% share, that will be known as private sector bank. Kindly provide chapter-wise mock test to analyze our knowledge. Prasanti ma'am, everything will be available, but not possible to do in a one day. On the 14th of January, your syllabus has been released. So already our content team is working on your ebook and the test series also. Okay. So it will take a little bit time, but that will be available for all of you. Don't worry. So the update, when it will be available, we will give you the update very soon. Okay, now next type of banks is foreign bank. Next type of commercial bank, we have a foreign bank. Now, what are foreign banks? Foreign banks are the types of bank whose headquarter is in foreign country. The headquarter of the bank is in foreign country. Okay, the headquarter of a bank is in foreign country. In India, they have only branches. In India, they have only branches here. That bank is known as foreign bank. So these are the types of bank under the commercial bank. First, we have public sector bank. Second, we have private sector bank. And third, we have foreign bank. So these are the three types of commercial banks. Clear? The people who are watching us on the YouTube, is everything clear to all of you? Ma'am, regarding NDTL banks, asset is included CR and SLR or only deposit other bank as current account? Subir sir, I am not understanding what you are trying to ask. In the NDTL bank, asset is included CR or SLR. See, under the NDTL, you are covering the asset, the liabilities of the bank. Okay, the liabilities, demand liability and term liability that you are covering under the NDTL. The CR or SLR has a certain percentage of NDTL which you have to maintain with RBI or with themselves, which the bank have to maintain. So NDTL is not including the CR or SLR. The percentage of NDTL will be maintained under the CRR and SLR. I hope your doubt is clear. If not, then do ask again with more clarity like what you are trying to ask. Okay. Now the next, this is the commercial bank we have discussed. Now we have a non-commercial bank. Now we have to cover the non-commercial bank. Now what are non-commercial bank? What are non-commercial banks? So the non-commercial banks are the banks which are not working for the profit purpose. They are working for the development of country, for the development of particular sector. So these are the banks which are working for the development of a particular sector in the economy, that is known as your non-commercial bank. Okay, now the other thing is, if I talk about the non-commercial bank, the other thing important here is, first, they are not accepting deposit. They don't accept deposit from the public. Okay, they don't accept the deposit. If they are not accepting deposit, they are not providing withdrawal to the customer also. They are only providing loan to the particular sector of a country to develop the economy. Acha, what type of bank these are? If I say, I am saying that non-commercial bank are not accepting the deposit from the public, they are providing loan only. So what type of banks they are? RBI is a central bank, na? RBI can't come here. RBI is a central bank of our country. Under the RBI, all these types of banks are covering. We have seen RBI here. You can see RBI is here right now. Under RBI, all these banks are there. So non-commercial bank can't be RBI. Very good. NBFC is not a bank. NBFC is not a bank. Don't count NBFC. CAIIB is there. Okay, CAIIB is there. Small Industries Development Bank of India. NABARD is there. National Bank for Agriculture and Rural Development. Exim Bank is there. Export-Import Bank. Then we have NHB, National Housing Bank is there. These banks are providing loan for a particular sector. Like if I talk about these banks, there is CAIIB. There is NABARD. Then we have NHB, we have Exim Bank. Okay, these are the banks. Like you can see here, CAIIB is working for small industries, NABARD is working for agriculture and rural areas, NHB is working for housing, and Exim Bank is working for the export and import. So these are the specific area where the banks are providing loan. Now IDBI used to be the development bank. Okay, IDBI used to be the non-commercial bank. But now the IDBI is accepting deposit from the public. Okay. What is the history of IDBI? IDBI, Industrial Development Bank of India, was established in the year 1964. Okay. When it was established, it was a development financial institution. Then in the year 2005, RBI changed this bank into commercial bank. It has been changed into commercial bank. But under the commercial bank, it used to be the public sector bank because the government of India had more than 51% shares. So it used to be a public sector bank. Then after that in 2019, RBI sold, not the RBI, government sold the 51% shares of bank to the LIC. So it in 2019, it was a commercial bank. It is still a commercial bank. But now it is what? It is a private sector bank under the commercial bank. It is what? It is a private sector bank under the commercial bank. I hope it is clear. The history of IDBI is clear to everyone. So IDBI is not a development bank. IDBI is not a development bank. If they are not accepting deposit from where they can give the loan, they are getting the funds in the budget. So in budget, Government of India provide loan for the agriculture and rural development. In budget, Government of India is providing loan for micro, small, medium enterprises to be developed under the CAIIBs. Apart from that, in government scheme, Pradhan Mantri Awas Yojana, rural or urban, Government of India is giving loan. So these are, Government of India is giving funding. So these are the banks which are getting funds from the Government of India. Clear? Okay, clear to all. Next. So this is what the non-commercial bank is. Okay. So in the next class, we will be covering the next type of banks, that is your cooperative bank. We have to start from here, the cooperative bank. Then we will be covering, apart from that, RRBs, payment bank and a small finance bank. Okay. Now, if we want to search what are the different types of banks are there, If you want to search what are the different types of banks are there, let me tell you from where you can watch it. So just go to the website of RBI. Just click here and enter here RBI. You can enter types of bank RBI. Just write types of bank RBI. You will find the RBI page. Okay, you will find the RBI's page. That is the RBI page, rbi.org.in. So you can go and click on the. Okay. You can click on the RBI website. So this is the RBI website in which you can see all the details of the bank has been given here. Okay, then this is not the proper bank. One second. Okay, so this is the list of bank. So these are the public sector bank. You can see these are the 12 public sector bank. Then you have the private sector bank. These are the 21 private sector banks are there. Is it visible or not? So you can see this is the public sector bank. These are the public sector bank. Okay. Then we have another, that was the private sector bank here. These are the list of private sector bank. Then we have schedule a small finance bank list. Then we have payment banks list. Then we have scheduled regional rural banks list. These are the regional rural banks. Okay. So 43 regional rural banks are there. Scheduled foreign banks list is there. These are the foreign banks in our country. So all these are the types of banks list is available here. So you can check the name of the banks from this particular list. Okay. You can check the name of bank from this particular list. So this is how you can find the list of the banks. Clear? So we have understand the types of banking system in India, but a little bit remains that we are going to cover tomorrow. Now those candidates who have not enrolled yet and they want to enroll in the paid batch, I will let you know the information about the paid batch from where you can enroll. So this is what the application will be look like. So if you have not downloaded the application of Adda 24/7, then do download the application because 1% additional discount will be available here. So you have to click on the JAIIB CAIIB section. After clicking on the JAIIB CAIIB section, if you want to go with the JAIIB target batch, you can click on the JAIIB 23, click on view all, you will find all these details. These are the batches which are right now going on the application. Okay, if you want to go with the English medium batch, this is the English medium batch. You can click here. After clicking, read all the details. 6 months validity will be there. The Indian economy started at 6 AM and the PPB is going on at the 9 PM. Okay, to enroll, you have to click on the buy now. Okay, after clicking on the buy now, you will find this page. Here you have to enter a coupon code, that is Y496. And click on the apply. When you apply, you will find 80% discount is going on. That is available till tonight only. 1% additional discount will be available if you use the coins on the application. 6 months validity is there. And that's the JAIIB, all the 4 subject batch. Okay. Apart from that, the more suitable solution for all of you to prepare the JAIIB as well as CAIIB will be your JAIIB and CAIIB Mahapack, because right now the double validity is going on. That will be a best option for all of you. By paying a less amount of money, you will be getting more value in return. So you have heard about the inflation now. Whenever there is an inflation, the prices are rising, and whenever the prices are rising, your money value is decreasing. But right now, prices are decreasing. The decrease in the price is known as deflation. Decrease in the prices are known as deflation. For a certain period of time, the prices keep down. Okay, when the prices are decreasing, the money value increasing. So by paying less amount of money, you will be getting more goods and services. That offer is going on the Adda 24/7. This is the offer which is going on here. Like you will get the double validity plus the 81% discount on all the Mahapacks. If you want, you can go with the JAIIB ka Mahapack. If you want, you can go with the JAIIB and CAIIB ka Mahapack. Both are available here. So I would suggest you can go with the JAIIB CAIIB ka Mahapack because 2 years validity is there, and you will be getting the 2 years validity and all the JAIIB subjects, CAIIB compulsory subjects, CAIIB elective paper will be also covered here. So do read all the details. After reading all the details, English medium, bilingual, both batches will be available, all the batches. And in the next 2 years, whatever batches we are planning on the officers, that will be enrolled in your account already. So to enroll, you have to click here and enter a code that will be Y496. and apply here. When you apply here, you will find 80% discount is going on. For additional 1% discount, you have to go to the Adda 24/7 application. You will get the 1% additional discount. 2 years validity is there. Will be covering JAIIB and CAIIB as well, both. So after paying around 10,500 or 600, you will be getting the JAIIB CAIIB Mahapack here. Okay. Now, if I talk about the offer, 81% discount plus the double validity is going on all the Mahapack. That is available till tonight only. After that, it will not be available. And the code to enroll will be Y496. And if you have not started preparing, then do start preparing soon. Okay, do start preparing soon, because the syllabus is very wide. Syllabus is very vast. We have to go with the syllabus by the proper time so that you will get the revision period also. Prasanti, again I am saying the same thing. The syllabus has came in on the 14th of January. So we were also waiting for the PDF of detailed syllabus of the Indian economy or PPB or AFB or retail banking. We were waiting for the syllabus. Now the syllabus has been launched. Now you will get everything. Okay, if we made a particular test series, there will be changes from the IIBF sites, then what was the use of that particular work? So that's why now the PDF has been come, the work is already going on. You will get everything, don't worry about it. Okay, so this offer is valid till tonight only. Now tomorrow, do make sure whatever we have covered in today's session, you will revise that, because we are going to cover in the next class, we are going to cover from here only. So that's why we will know the old syllabus or old concept which we have studied here. The physical books from what? The Macmillan book is already available on the Kindle. You can check there. Not the physical book is available right now, but yes, on the Kindle, the e-books will be available. And on Adda 24/7, I will be letting you know when I get the information, well, when will be the books are going to be ready. Okay. So let's end the session here. See you tomorrow at the same time. In the mornings, PPB sessions are going on at 7 a.m. and at 8 a.m. Indian economy session is going on. And at 7:30 p.m. we are having an Indian economy session in bilingual class. Okay. So let's end the session here. See you tomorrow, everyone, and have a very good night. Take care all. See you tomorrow.